Thanks so much for your time today, Sharon. Do you know you're the first female VC I've interviewed in this whole 2 days? I can't believe it.
Oh goodness, but well, hopefully you'll get a chance to talk to my partner Kate Mitchell, who just got the Service Award.
Yes, and tell me, you've just raised a new fund, I hear.
Yes, so Scale Venture Partners just raised our fourth fund, $300 million fund. We were really excited. We got great support from our existing LPs and some new LPs. And we were lucky enough to raise it very quickly and at our hard cap. So that was rewarding, because now we can go back to the investing business and working with the portfolio companies.
And just for some of the viewers, what do you usually like to invest in?
Yeah, so Scale Venture Partners invests in companies that are in the scaling phase, so growing their commercial revenue. So after you've got product market fit and you've found that early sales channel that's working, you raise money from us to help scale the business. So our companies average about $4 million in revenue in the year we invest. They average a growth rate of about 97% a year. Some of them are much higher. You know, sometimes they don't work out quite that fast, but that's a very typical investment for us.
Fabulous. And what do you think about all the changes that are happening in the venture industry? Obviously, there's two sides to the coin, and the Jobs Act was one of the spurs to the changes, and obviously there's lots of negativity in the media, but I'm also seeing great opportunity for the venture industry, mainly because I'm so passionate about it and love to support you all. So I'm just wondering what your viewpoint is and how we can move it forward in a really positive way.
Right, so I think the biggest fundamental thing is that innovation keeps happening, kind of regardless of economic cycle. New things are happening. For example, right now you've got the twin trends of cloud and mobile kind of changing the computing architecture completely in the same way that the emergence of the web did in the mid-90s. And that's creating opportunity across the spectrum, both consumer-facing kinds of companies, enterprise applications, and core computing infrastructure kinds of companies. So there's just this massive upheaval of new products and new technologies that customers are buying. So that creates a ton of opportunity. On the other hand, you have the whole financial sector, what's happened in venture capital, how much capital is there, and what's happening in our little ecosystem. We're about 0.2% of GDP. It's a tiny percent of GDP, even though the companies that we invest in end up driving about 21% of GDP. But that 0.1, 0.2% of GDP that we're currently investing on an annual basis is down sharply from over 1% of GDP at the peak of the bubble 1.0. So people think of that as the heyday of venture capital. And in fact, it was this crazy spike of returns that came from that web new architecture, but then it pulled in so much capital, flooded the market, that it's drowned venture capital returns for this ensuing 10 years. And so the industry really has right-sized itself now to about the same size it was as a percentage of US business in the 70s and 80s. So it's about, in the firm, we think it's about the right size right now. There's plenty of capital for companies, but not so much that you fund 20 competitors for every good idea and then just kind of tank the market.
Okay. Well, that's a really interesting perspective, and I really appreciate your feedback, and I wish your firm and you all the best. I know you're just always lightning ahead of lots of
thanks, Mio.
So,
thank you.
Yeah, I really appreciate your input in the industry. Thank you.